All right, everybody, welcome back to today's midweek market breakdown. Sorry about that, a little late this morning, but we're here now. And last week, we actually had quite a great week. We had about a little less than 700 pips for the week. So, what does this mean? This means really nothing, except for we need to. Start preparing for a possible drawdown soon, which it should be something that we should be prepared every time anyways, because we always with all these trades we always want to hope for the best and prepare for the worst. So most of the trades last week are advanced pattern trades because we do have a lot of consolidation going on last week. Now, if you do want to learn advanced pattern trading, we do have a course on the website. I'll put that on the link. It's www.tradingelevated.com, and it is taught by Mr. Jason Stapleton. And of course, if you sign up through through that website that I gave you, I would be part of your resources. If you're just, you're not ready to commit to learning strategies like that or advanced pattern strategies, then just hang around. You'll learn a thing or two. I do go through my trading portfolio every day, and a lot of people kind of pick up a lot of things. All right, and let's go ahead and get started. Let me see where the charts are. All right. Let's start with the euro dollar. Okay, so we're still in consolidation on the daily. Let's get to 240. All right, the 240, we do have this flag pattern right here. I don't trade flag patterns, but a lot of people do. And usually with this kind of patterns, price starts or tends to, once it goes out of this pattern right here, is it turns to break out to the upside. Oops. Oh. There you go. It tends to break out to the upside. Now, common knowledge about this thing is that it tends to make a move the same distance as the pole right here. I don't trade it. There's just because it's a little bit hard to kind of put your entries and stops, because it could definitely, sometimes it could go on a lot longer than this, and you could have your entries right up here. You get triggered, and you could still technically, until this level right here really, or right here I guess, gets violated, it's still a flag pattern. So that is why I don't trade that. So let's go down to the 60 and see if we have any of thing that we can take advantage of, or I can take advantage of. Nope, nothing there. So let's go to dollar CAD. Dollar CAD had retraced back down to this structure zone right here. Just a few structure resistance right here that price did violate. It did kind of stop there for a little bit, but now it's right in the middle of these zones right here. So let's go to a 240. Nothing really on the 240. Let's go down to the 60. The 60, let me just see. The 60 did have this cipher pattern. Let's see. This cipher pattern right here. Let's double check. Yep. So the 60 had this cipher pattern right here. Exit A, A2B, B2, B2C, C2. D at the 786 right here. However, it did go a little bit below the X, violated that X with these two highs right here. Depending on your rules, some people have some rules where they would still consider that a pattern or a valid pattern until the price actually closed above this X level. I did enter through here this morning. Right here, of course, targets has not been hit and stops also are not hit yet. So I'm still in this trade. If you do trade this pattern and these highs right here does not violate the pattern for you, it is a little bit better entry. And you know that minimizes the risk a little bit. It's still pretty risky trade still. But first targets is about 70 pips, and to second targets is about 113. So there's that one there. Let's go ahead and go to dollar yen. All right, so most recently we are in some sort of consolidation. Let's go to 240. $240, nothing there. And 60, nothing right now. Let's go to pound dollar. Yes. All right, we're still making lower lows and lower highs, so we're still in a bearish trend, an extreme bearish trend at that. Let's go to 240. Nothing there. 60. See if we have, nope. All right. Let's go to Aussie dollar. Okay, we did violate these structure resistance right here. We are now just made a higher high. Let's go to 240 chart. Nothing there. 60. And nothing there. All right, let's go to New Zealand. Okay, we are in consolidation in the New Zealand. Let's see. I have something. This is not going to be a pattern for me. How it just barely hit my 786. If your data did not hit that, this is a valid Gartley pattern that has a really great risk to reward ratio, because your completion point is going to be right about, if not right on, the X level right there. But for me, that is not valid. So let's go to the 60. Let's see. Nothing there. Okay. Let's go to Euro Yen. Euro Yen also making lower lows and lower highs, still an extremely bearish movement. Now, we did talk about this last week, that price had retraced back to previous structure support, which can now act as a resistance level, and price could be coming back down to this structure support right here. Now let's go to our 240. 240. Nothing there. Let's go to 60. 60. Let's see. Okay, so if price continues to come back down, back to this 886 level at 124.05, we would have a bullish bat pattern. And first targets would be 382, about 124 pips. Second targets is about 199. And stops are going to be a little bit below right here. I usually use a 113 extension. So let's see, about 86 pips for stops right there. So that's one thing that we could have on our radar. And then last but not least, JPY. Let's go on the 240. All right. Oh, let's go to our daily chart first. All right, our daily. We do have that cipher on the daily. Daily charts tend to have a really high risk to reward, or risk, actually, because it's something that I don't trade because of the risk that is involved in daily charts. It's way over 100, really. It's my limit. Or I guess 200, 623 pips of risk, and that's something that I do not want to take part of. So let's go to 240. Let's see. Can have nope, not on mine. If your 127 is hit by this high right here, if your data shows that, you could have a cipher pattern here also, but it is not hit on mine, so that is not a valid pattern for me. And a 60, another cipher pattern. Yeah. Our original completion is actually right at that 127. I'm sorry, the 786 price is a little bit below that, so this is a better entry. And it has not violated this X level right here, so it is still a valid pattern. So that would be XA B and D right here. First targets would be about 141. That means that our risk is more than 100 on this trade. So just be mindful of the risk. At this time, however, you do have a better entry, so risk would be a little bit less than 100 pips. So there you have it, traders. I will see you next week, same time, same channel at 7:30 GMT on Wednesday. And as always, good luck, traders.